guys, so Friday, well, Thursday in the US, but Friday here, we dollar broke out of this little bit of a consolidation sort of range or pensive move. As initially I thought it was safe haven, but we go and have a look at the stocks and it turned around neatly. And I love it when charts do this. Albeit it was only like in the last couple of hours of trading, so it was after lunch. Sort of came back and filled this in, and that was nice. But what I like is when markets do this, right off the 61.8 level, bounced off that support as we're exhausted. So next week we don't be surprised if stocks, which are crazy, get bid, and that would put the kibosh on any sort of safe haven flow. But certainly the US dollar is broken out, and it is getting sort of quite a distance away from its moving average, which tends to be the end of the run. You wouldn't be buying it here at the for a long-term view. You never sort of do that when you're this distance away from the moving average. We can see when it gets even away from the 20 EMA, which is this blue one, it tends to turn around and come back. And that's been the case since this sort of trend started over a year ago. We're up here, we're at exhaustion. When that happens and you're quite a distance away from the moving average, you get that snapback. So there will be a little bit more upside, but I don't expect it too much. What we're seeing is the pound is way over extended, needs to come back. Aussie's not quite there, and I'll talk about the commodity picture in a minute, but and the euro is also not quite exhausted as well. So that's why I think we might see a little bit more on the US dollar, as the euro sort of didn't get up here before selling off. So I think we might have a bit more of a down leg, and then get that rally as we hit the exhaustion mark. And that's why I think we might see some more buying in the US dollar, i.e. this index, which is a majority of being the euro anyway. We'll see that a little bit more upside, and then you'll get that retracement, and same with a little bit more downside on the euro. Regarding the Aussie and the commodity picture, we're seeing it pretty ugly in the commodities. Let's go over here. Whilst we're here, we're seeing the bond market continuing to rise. That picture of rates being higher for longer, and that narrative is still there. And that's why I don't know about stocks. The stock market did look pretty, bouncing off that 61.8 fib, but fundamentals, it shouldn't really be a buyer's market. So commodity. Look at this index here, the Bloomberg Commodity Index getting smashed, copper smashed, iron ore smashed, coal holding, but everything else absolutely nasty, which doesn't paint a good picture for Aussie. And we saw, or BHP was the bigger reason why the Aussie 200 gapped lower, and we're seeing the Aussie dollar weakness, and I'd expect that to continue through to next week as well. For how long? How long's a piece of string, I guess. But yeah, I'd be cautious about buying US dollars right now. I'd be, i.e. selling pound, euro, pound, the cable, selling euro dollar, selling Aussie dollar. I wouldn't be doing that now. If you're not in the US dollar, I'd be sort of trading it with a lot of caution on the shorter time frame, but ideally you'd be waiting for the retracement and a bit of a pullback and looking for the next leg down, if there is another leg down. But yeah, that's it guys. Have a good weekend, and we'll be back on Monday.